Good afternoon and welcome everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it's been a lackluster day largely, of course, but the good thing is that at least we are trading in the green zone at this moment. Whether that will sustain till the closing bell, we'll have to wait and see. But the Nifty and Sensex clearly are trading in the green territory, aided by some positive cues coming from the Asian as well as the European markets. But it's the small cap space where we are seeing a little bit of pressure at this point of time. The Nifty small cap index was slightly in the negative territory. Among the three major indices, that was the only one which was actually seeing profit booking in today's trade and underperforming the large cap as well as the mid cap space. On the other hand, if you look at the crude oil market, clearly there is a comeback there also brewing. Brent crude oil futures were higher by 2% after yesterday's huge volatility that we saw and I spoke about in the morning. Clearly there was some bit of relief rally coming in the oil market. And of course, if you look at some of the individual counters, Paytm taking a deep hit, Santo today down about 10% in trade, hitting a record low and achieving that price target of about 480 rupees that Macquarie had set about 6 to 7 months ago.
Well, before I get on to my pitch, CJ, what exactly is the reason here?
So, Santo, of course, we are aware that Reliance has decided to, of course, demerge its financial services business, which will be known as Jio Financial Services. It is demerging that business and then relisting it on the stock exchanges. Now, Macquarie Capital Research came out with a note this morning, and of course Suresh Ganapathy, who was of course one of the first ones to come out with a note on Paytm as well on the day of its listing back in 2021. Now he said that there is a possibility, although there is no confirmation yet, but there is a good possibility that Jio Financial Services will target consumer lending and merchant lending going ahead. Now we already know that Jio has certain point of sales instruments that it has already with certain merchants who have tied up with its e-commerce grocery app, that is JioMart. Now if I were to think it from that point of view, clearly it really has the means to already reach out to a lot of merchants out there who probably need low cost financing, working capital requirements, etc., etc. Now we know that is the avenue that Paytm has been pitching, is what is their growth area, right? Paytm has been positioning itself as a merchant lender. It has seen a spectacular growth if you look at it in terms of loan value as well as number of loans disbursed on a year-on-year basis in the September quarter as well. It has been doing quite well in that segment. So clearly, with a company like Jio Financial Services, with the muscle power that Jio Financial Services has, that is now a new existential threat as far as Paytm is concerned, and that is why you can see that reaction in the shares of Paytm, the stock falling about 10% clearly on the realization that competition or competitive intensity is likely to heat up several notches in the space that it works in.
Well, now here's a googly, CJ. You've strongly been defending that stock all along.
True.
Losses have been narrowing. Are you still bullish on the stock?
It's not about being bullish, Santo. At least as far as Paytm is concerned, I think so far I have seen improvements, and I think nobody can ignore that. What happens in the future, whether Jio Financial Services can do what it's trying to do. See, JioMart was supposed to be the next Amazon. We still have to see the evidence for that. A lot of ventures that Reliance has gotten into have not yet yielded the sort of results that everybody was waiting to see. So we'll have to wait and see whether that competition really becomes a real existential threat. But as far as today is concerned, the here and now is concerned, clearly there is improvement as far as Paytm's financials go. Profitability is improving. They are looking at as if they are going to achieve that EBITDA break even before schedule. They have indicated that they might achieve it in the second quarter of FY24, but the CFO in the recent con calls suggested that it could happen as soon as the June quarter as well. So as far as what Paytm can do, they are trying to do, but of course market will always has its own idea about the future, and clearly you can see that in the stock price.
Well, and that said, moving on to the market setup, frontline shares, CJ, my view is that they'll continue to outperform for some more time. That's also largely because much of the foreign money that we have seen coming into the Indian equities has been largely of the exchange traded fund nature.
But don't you think, Santo, there is a concern that all of this money is only going to large caps? Generally, large caps are for those who are safety first approach, right?
Well, yes, definitely at some point. Again, see, the whole thing is that unless you see second line shares doing well and retail money coming in a big way, you really won't have a sustained up move. And the issue here right now, as I've been pointing out earlier also, is that the earnings of most mid cap and small caps, they have not been something blowout. Of course, they have been just about okay. They have not been as bad as probably.
Yeah, especially the margins have been really bad.
That's clearly under pressure. So that being the case, there's no reason for second line shares to move up in a big way at this point in time. And CJ, the good thing at this point is that Nifty is consistently showing strength above 18,200 levels. So probably if it manages to stay there, maybe we'll have some of the believers of second line stocks coming back once again.
Absolutely, I think Santo, the 18,200 level is the sacrosanct level now. I think if that breaks, then there will be a little bit of jitteriness among bulls. But if that sustains for coming sessions, then probably that will give a lot of confidence to bulls going ahead.
And some FNOQs here, we are seeing short build up in the futures of IEX, Intellect Design Arena and HPCL, and we are seeing long positions being built up in the futures of Hindustan Copper, Trent and Hindustan Aeronautic Limited. A very strong set of numbers from HL, and one would have thought that probably the stock is close to peaking out, but looking at the way traders are still piling onto the stock, I don't know what to make of it.
Yeah, I guess the stock can remain in overbought conditions for a very long point of time. Clearly the wind is in the sail as far as HL is concerned. That said, moving on to the stocks that were on our radar today, and starting off with from the city gas distribution space.
Yes, Mahanagar Gas and Indraprastha Gas, both stocks among the prominent losers today. CJ, the renewed pressure on the stocks has to do with the fact that globally natural gas prices have once again started to inch up, and they are now around their 50-day moving average, which is probably having, which is causing more concerns to companies like Mahanagar Gas and Indraprastha Gas, which already had just about lackluster second quarter numbers. Higher the gas prices, more the pressure on margins because demand gets hit. Now, within the gas space, CJ, if you look at the companies which cater largely to the retail consumers, those companies tend to do slightly better even in this thing. That's partly because they get some relief from the administered price.
Right. And the government is also trying to help them out. Yeah.
That is there. So the pressure on, let's say, an IGL and MGL still will be less compared to that on a Gujarat Gas, which largely caters to the industrial set of consumers. That said, CJ, if you look at both stocks, IGL as well as MGL, now IGL has been holding above 800 rupees. It's not gone below that, whereas MGL has been managing to hold above, IGL has been holding above 400 rupees and MGL has been holding above 800 rupees. So some kind of bottoming, it seems like, is happening there. The prices are close to their bottom. Most of the negatives seem already priced in there. The stocks didn't fall much after the lackluster second quarter numbers also. And as I've always been saying, CJ, the long-term structural story of that of rising demand for gas consumption in the country, that remains intact. So once natural gas prices stabilize a bit, I think the stocks are going to do very well.
But Santo, I don't know if natural gas prices are going to stabilize anytime soon. I mean, if you look at some of the commentary coming out from global markets, yes, the government has been trying to give greater share of the common administered pool to CGD companies, largely in the hope that it will not pinch the wallet of consumers as much, as it will not allow a lot of these companies to take exorbitant price hikes. But natural gas prices themselves are likely to remain quite elevated, not only in 2023, but now some of the commentary coming out from Western experts, Santo, is that this could remain, the situation could remain the same till 2025, because supply so far is not able to catch up to demand. We already know that supply has seen a lot of destruction because of the sanctions imposed on Russia. Because of that, natural gas prices in Europe have been surging to record highs almost on a daily basis, and now long-term LNG prices even in Asia are now inching higher because supply is unable to catch up with demand. Now the fear is that if China reopens next year fully, probably in the second half of 2023, then that will lead to another upswing in demand and suppliers will not be able to catch up. So there remains a risk that natural gas prices could continue to go higher, and any sort of relief will probably end up being negated by the higher prices. So that risk on margin clearly remains for me. And the other new thing, Santo, that a lot of these companies have to be aware of is the fact that new pipeline tariff order has become implementable from today onwards. So that also raises overall costs for these companies in terms of transportation. So overall, the margin picture is not looking good, and that is one of the reasons why we are seeing the sort of selling pressure that we are seeing on these two counters?
Well, the NTO definitely seem to be beneficial for companies like GSPL and GAIL. Those are the stocks which are doing well in trade today.
Absolutely. Moving on, the first stock on my radar today is from the auto ancillary space, and this is Steel Strips Wheels. Now, a surprise package of a stock today because the stock surged after it reported to the exchanges that it has signed a memorandum of understanding to foray into the electric vehicle space. Now, it has entered a MOU with Redler Tech, an Israeli company, and they intend to now form a joint venture in India. And under this joint venture, they will be manufacturing motion controllers for electric vehicles, basically in the two-wheeler, three-wheeler, as well as the four-wheeler space. They aim to become a chief supplier of motion controllers for EV companies or EV manufacturers. So clearly, a big update coming in from Steel Strips, and this is probably going to diversify its revenue base, lead to a big kicker for earnings maybe in the future if everything goes into plan. And clearly the market is reading it as such, given the fact that the stock is higher by about 5.5%, Santo.
Well, definitely it's some bit of sentiment based buying that you're seeing in the stock today, but although CJ, in this kind of a market, I would be a little wary of theme stock, especially electric vehicles, a story which has been flogged to death. Competition out there is intensifying quite a bit. Now, in the case of Steel Strips, if you look at the fundamental side of the story, it seems good. Although last 3 months revenues have remained in a range, definitely, but there's been an improvement year on year. So, the fundamental story definitely look good. Some quibbles on the margin, but at the same time, the price action again seems to show that market is a little hesitant about the stock at this point in time. Well, with that we move on to the next stock, BLS International. Now, very strong set of second quarter numbers there, and that's also reflecting in the stock price performance.
Stock has tripled this year, Santo, 240% gains if I am not wrong.
And it's, if you look from the lows of the pandemic, March 20, this has almost been a 20 bagger.
Wow.
I mean, who would have thought that a relatively innocuous
relatively unknown company, if you look at it.
It's a very non-glamorous line of business when you look at it, but suddenly it seems to be like a gold mine. Now, the company is also sounding pretty bullish. Now, it has said that it has now operations in about 64 countries and is working with about 46 governments. It's recently won orders from the Thai, Kenyan and German embassies. The order from the German embassy is the first one, but it has come in at a higher price. The company's target is to maintain operating profit margins at 16%, and it's been doing a decent job of that so far. To some extent, there has been it did lose out on some revenues from Russia and China because travel to those countries are restricted at this point in time, but that's been more than offset by the strong demand for visas from other countries. Besides that, the company is also providing now value added services at this point in time, which is mobile, biometric and courier delivery, two of the services on which it's able to get better margins. So, things looking pretty good at this point in time for BLS International Services.
Santo, no arguments on the fundamental side. Clearly, I mean, at least what is in front of you on face value looks quite good. But technically, I think there are a few points of concerns for me. First of all, there was recently an insider sale on the stock actually coming in from its North America business operations head. So that clearly, sometimes when insider sales start coming into a stock, especially a low liquidity stock like BLS International, tends to be a sign of possible peak for the stock in the near term. So watch out for that one. Also on the momentum indicators as well, the stock clearly is in overbought conditions. RSI is sharply above the 70 mark, so indicating that possibility of profit booking remains. And lastly, Santo, when you talk about sustainability of a rally, generally, especially for a small cap or a mid cap stock, sustainability of a rally becomes much more visible when there is more and more institutional presence in a stock. And clearly, in the case of BLS International, you cannot see any sort of institutional presence, at least from the domestic institutional investors. There is literally no mutual fund which has a holding in BLS International at this point of time, which makes me a little skeptical as to how long this rally could sustain. Although we have, as Santo mentioned earlier, it has already been a 20 bagger from the lows of the pandemic and already higher by about 240% in 2022 itself. Moving on, the last stock on my radar today is from the ceramic space, and Kajaria Ceramics is the stock that I want to talk about. Now, the stock has undergone quite a correction. It's down about 15 to 20% for 2022. So clearly, there are concerns, there were concerns with respect to margins, and the stock has taken a suffering for that. But I think this correction there is a possibility that this correction could reverse, Santo, in the second half of FY23. And I say that because the pressure on margins that we have seen in the first 2 quarters of FY23, that is likely to reverse or start to ease in the second half. Now, why that could happen? Of course, ceramic companies were hit by the higher natural gas prices, or higher natural gas prices for the industrial segment at large. But the companies themselves are now trying to, strategize differently. They are now depending on alternate fuels such as LPG, which is about 15 to 20% cheaper than natural gas. So clearly, there is a shift now happening. In the case of Kajaria, there are almost 40 to 50% of their capacity has already shifted to alternate fuels. So that should aid, margins on a sequential basis. Apart from that, as far as the demand, environment is concerned, that clearly remains quite healthy at this point of time. Many of the brokerages who cover the ceramic tile industry, they have indicated that the demand environment and the demand indicators, at least as far as the channel checks they have done, are still quite robust. So therefore, demand is not a concern. Margin was the major reason why the stock had suffered, and with that probably easing out a bit or maybe even reversing in second half of FY23, you could see the stock performing quite well going ahead.
Well, two quibbles against the stock, CJ. One is that clearly the margin aspect which you've highlighted. Yes, higher gas prices are a big pain point for a company like Kajaria Ceramics, and it has tried to alleviate that to some extent by shifting to LPG partly. But besides that, CJ, I think also if you look at the top line number now, almost for 5 quarters in a row, the top line has been pretty much within a range, right? Yeah. This comes at a time when actually the real estate sector has been booming. So in a booming real estate sector, if the company has not really been able to grow its top line in a big way, now we are looking at higher interest rates, probably that which could affect demand for homes in general. Yeah. There's already people talking about a slowdown there. So when that comes in, I think there's going to be more problems for Kajaria Ceramics.
Yeah, we'll have to wait and see whether that slowdown comes. I mean, if you look at real estate prices at this point of time, clearly there's no indication that there is any lack of demand. Project launches are probably at an all-time high at this point of time. Real estate prices have been going up, Santo. So I think outlook from the real estate standpoint still seems quite okay as far as ceramic tile makers are concerned, but we'll have to wait and see whether that situation deteriorates if interest rates continue to rise in the vein that they have been rising so far.
And last stock on a watch list this afternoon is HDFC AMC. Now, the stock the stock has been holding steady in a lackluster market, and from 3 months back when we spoke about the stock, it has risen about close to 20%. Now that's definitely not bad. From the lows of around 1700, it's now moved to 2100, and it's been holding above that. A few things that seem to be working in favor of HDFC AMC. Now, one of the reasons is that there's been a steep market share loss that's due to the underperformance of its scheme, but that now slowly seems to be reversing at the margins. Operating performance has been pretty flat over the last 4 quarters, but that could also be an indication that maybe things are bottoming out. Besides that, CJ, whenever the markets are lackluster, that's when the passive strategy does not really work, and that is where actively managed funds tend to deliver better returns, and HDFC has a larger proportion of its scheme in actively managed fund, and so in this kind of a market, probably HDFC AMC could turn in a better performance, and that is what I think the market seems to be positive about.
Santo, I think as far as the the active passive mix is concerned, I think that situation there could actually be turning around, given the fact that if you look at the recent launches that HDFC AMC has done in terms of schemes since July, after that ban was withdrawn by the SEBI, most of the scheme launches have actually been on the passive side. Clearly, the company is going very aggressively on the passive products segment, and there is a risk with that, because if if your share of inflows on passive products increases substantially, that could have an impact on your overall margins, because the fee that you get for managing a passive fund is much lower than what you get for an actively managed fund. So I think there is a bit of a risk as far as margin is concerned. I take your point clearly. Market share improvements have been happening, although they have been slow paced at this point of time, but still there is an incremental improvement, and that is what clearly the market is reading at this juncture. Also, let's not forget that there is a there is a point of view that if the HDFC Bank and HDFC merger happens, then what happens to the stake of HDFC Bank or HDFC in HDFC AMC, whether they will bring in a strategic investor, whether they will not do it, that remains to be seen. A lot of people are expecting that a strategic investor could come in, maybe buy more than 25% stake, which could automatically trigger an open offer on the counter. So going ahead, a lot of interesting times. It seems interesting time in a good way for HDFC AMC, but I'm still not convinced whether this is a stock that could probably give a substantial outperformance to the general market in 2023 for me, Santo.
And with that, let's take a quick check on the markets at this point in time. Nifty up by about close to 81 points. In fact, it's been going from strength to strength, CJ.
Yes, Santo. I think we are now seeing a little bit of a recovery in the market. The Nifty
maybe the
50,
3 o'clock trade.
Absolutely. In the Nifty 50 now about 0.5% higher. Sensex similarly in the same territory. Even the Nifty small cap index has now turned into the green territory. The Nifty small cap index higher by about 0.1%. The Nifty mid cap index higher by, actually it's down again, so clearly it's quite volatile trade there, but Nifty mid cap is doing quite well, it's higher by about 0.5%, so going toe to toe with the large cap space. And very interestingly, Santo, the India VIX index is actually down quite sharply. I think if you look at that index, down about 6.3%, now at 13.8, so clearly a fresh 14-month low for the volatility index, indicating that there is confidence in the market that this market is not falling sharply anytime soon.
Well, and with that, what are the things that we have on the radar to keep an eye out?
Well, Santo, largely not too many data points, but largely, of course, you watch out for the speeches from Fed members, Loretta Mester and Bullard. They'll be speaking later today in the day, so keep an eye out on those speeches. Apart from that, tomorrow you will have the German November manufacturing PMI data coming out, as well as the US building permits data for the month of November coming out. So those will be key data points as far as the market is concerned. But besides that, not really much on the horizon, Santo.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. Thanks for watching as always, and please do send in your feedback and queries, if any, post them in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.